Welcome into the crypto bunker. Today we're going to be looking at Ethereum and the Ethereum chart. We can even look at, we're going to look at some different things. We're going to look at the ETH Bitcoin ratio. We're just going to compare the 2017 run to this run, because let me tell you, these are looking eerily similar. And let's look at this wedge that we're forming now. We actually have, even with this massive crash, and I know I made a video when we were like right here, and we crashed all the way down here, but this was just straight liquidations. It literally had nothing to do with the price. Everything got soaked up immediately, and we still closed above this trend line. And then now we're going up again. So what happens when we break this trend line, which I do think we will do relatively shortly? We could get rejected once, we could come down and then break it. That's a possibility, definitely. But what will happen when we break it? I think that this fractal that we're looking at here is very similar to what we're looking at here, especially if you zoom out and you think about it like this, right? If you look at that, we had a big run up, a correction, another run up, another correction, a run up, and then a chop correction. See if we get that in the 2017. We had, okay, we had a run up, correction, run up, correction, we went up, and now we're chopping. Not only does this look exactly the same on the chart, it looks sort of similar on the RSI. We can look at that. We went up, and then we chopped, up, chop, and then up for the final run. But it's actually the same price. And I said this, I've been saying this actually for a little bit of time. And let me just hide this panel real quick. But I've been saying that this is the same fractal that has played out. Now, we went a little bit farther, in terms of just, we went a little bit lower here. But this whole run up has actually looked very similar. Okay. And it's crazy how similar these look. I mean, in my opinion, we have these double peaks, and we can even look at it on the weekly, and it's also similar. We obviously didn't get this big of a wick, but we did get a wick, and we're in the same price ranges. We went up to about 4,850 down in these ranges. This is like 3,400. See here, we went up to around 486 down to around 390. So just 10x it, and we're looking at basically the same price. And so what happened after that? We went all the way up to 1430, daily close around 1380. So in my opinion, we could see something similar with Ethereum coming up to, the next few months. I wouldn't be surprised if we did this. We went up, and then we came all the way back down. Something like this. And then we made a run. Okay, I would not be surprised at all to see this play out. And it looks crazy, but if you're looking at it, something like that. Now, obviously, none of this is financial advice. I'm not your financial advisor, but this could be a pretty crazy run that we could see here. And, this is exactly what played out here. If we're looking at this chart, we had a run up to around 867. So look out for that number. I think around like 8,000 would be a number to look out for, honestly. And then it goes down to 495. Okay, so, maybe we get something like that. Maybe we get, I don't think we do. I think we've had a big enough shakeout that we might just go straight up. We'll have shakeouts along the way, but we got here by, and this is the same time frames, remember. So we got to the top around January 13th. in that time range. And right now we are basically playing out the same exact range. So let's look at the ETH to Bitcoin ratio real quick, because this is also an indicator of the markets and sort of what the markets are thinking, because I think Ethereum is in a bullish trade and a bullish trend, okay, according to Keith McCullough. And, you know, this looks really good. We broke out and we're just off to the races at this point. You can see on the all-time view that, you know, even like, let's just look at the weekly, right? Because we are, you know, we're looking really good on this weekly chart. And, you know, we could have pullbacks along the way, but I think in general, this chart will go to around 0.12, if not more. I could see us breaking all-time highs. I could see 0.14, 0.16, something like that. If we look at just this move, if we see that break, that would be about 0.13. So something to take a look at, but this wedge that we formed here, we totally broken out. And we're not looking back at this point. So if you're a trader, if you're someone who, you know, likes to make money, you would want to be in Ethereum over Bitcoin, in my opinion. If you're more of a long-term investor, you believe in Bitcoin, the ideals and all that, I get it. But I do think that most of the Web3 exposure that a lot of these hedge funds are trying to get, they're getting it through Ethereum, and it makes sense because Ethereum is the reserve currency of the metaverse. Let's take a look at MATIC real quick, because MATIC is flying off the rails at this point. And we gave this out 3 weeks ago, so I hope that all of you, you know, did look, you know, took a look at that video. It has a lot of views if you want to go back and check it out. But our prediction, you know, it stays similar. It's going to be around 380, although I think it could run farther. You know, if you were in the trade with us, you know, you would think about taking profits there. I mean, knowing me, I won't. But yeah, like around 386, I mean 387, something like that, I think makes sense for MATIC. I mean, the weekly, you can see we closed all-time highs and we're off the races. I think that they have some announcements coming. I think there's going to be new chains that they're developing. I think there's going to be Coinbase integration coming within the next like week or so. I'm just guessing. This is a total guess, but I do think that's coming. And so I wouldn't be surprised to see a $10 MATIC if we get the Ethereum run that I think we will to 14, 15,000. I'm gonna make that my target for Ethereum. Okay, I'm gonna probably look to cash out at around 13,800. Not financial advice, but I'm gonna do that because I think that the fractal just looks exactly the same as 2017. So, you know, why not let that play out? It could run farther. You know, if it runs straight to 8,000, I'm gonna sell. Because that would be, you know, a little bit crazy for it. And that would hit a lot of targets for a lot of people. I think my target was always like 6,500 for this year for Ethereum. So even that would be a good run. But I'm looking for something a little bit bigger, you know? So if we went straight to 8,000, like within the next, like, I don't know, 2-3 weeks, I would probably sell. If we just creep our way sideways or up a little bit, then I'll just wait it out and maybe we just have one big run up to 13,800. But I did open some longs using Aave on Polygon, and I guess I can just show you because it's not even that big of an account. This is like it's just a smaller account. I decided to do this with. But basically what I did was I took 1 ETH and I took this MATIC that I have, and I basically just borrowed money, borrowed this money, which I'm earning interest on, paid in MATIC. So look at this, I'm earning 10% interest to borrow USDT and 4.6% interest to borrow DAI. Obviously, I have to pay the APY as well on top of that. But because I think MATIC's going to go higher, I mean, just like, you could just, 3x or 5x these percentages. So I'm getting paid to be long in MATIC tokens. You can see the claim here. And then I went to Sushi on Polygon. I swapped these for ETH, and it got me an extra 0.71 ETH. So that's my trading account. And then you can see my health factor is 2.74, which is really healthy, which means we could crash by 50%, and I would be okay. We would have to go under like $2,000 Ethereum for me to be okay. And the way you do that is you just take the amount you borrowed, and you might, you calculate it as the amount that your collateral can get to, the lowest amount. So for this, it would be, let's see, it would be, let's just take a guess. 4,500 times 0.75 is 3375. So 4,200 times 0.75. And the reason is 0.75 because you want to keep your loan to value ratio at 75% of your borrowed ratio of your borrowed amount. So, okay, I got it on that. 4,200 is the lowest I can go. So you do 4,200 divided by your current collateral. So I would need and that's 37%. So you take that minus 100% minus that, which would be a 63% drop from here, which would be a 1628 Ethereum. So Ethereum would have to get to around 1628 for me to get liquidated, which, as you can see, this is a pretty safe loan. I'm willing to hold it to that level. I'm even willing to maybe increase it because I don't think we see a sub $2,000 Ethereum, and I'm willing to risk the one Ethereum that I have in there and also the MATIC for that trade. So this is kind of a way that you can safely lever up. You don't actually have to be in these like crazy leverage longs on BitMEX and Bitfinex and all that and FTX. You can actually do these are what's called low leverage loans on Aave, Polygon, and it's like free to use. Basically, you're getting paid MATIC tokens to do it. None of this is financial advice. This is obviously for most likely experts only. You guys feel free to DM me, crypto_bunker if you have questions about this type of thing. I just wanted to show you how to use Aave and the things you can do with it, because you can just, you can obviously borrow, you can swap it for ETH, and then you just put the ETH back in the collateral. And so that just kind of, and then again, you have to do the calculation so that you know how low you can go to get your liquidation price. And so personally, I'm willing to go up to, a little bit under $2,000 Ethereum as my liquidation point. I don't, and some people be like, oh, that's so conservative. Like, it's obviously not going to go back, even. And I'm like, you know what? Like, I think if we go into some kind of bear market, I do see us bottoming out around like 2,400. So I'm not, willing to get close to that. I'm just going to say, again, under $2,000 is how I would do that. And then you just find your targets and you try to trade around that. Again, I hope that, none of you guys take this as financial advice. Like, I'm not telling you to go do this. I'm just showing you how to do it. Because I feel like not enough people understand leverage and like how to use it. You can use it safely, in my opinion, in this way, as long as you're okay with holding through a crash and understanding that it probably won't go that low, but if it did go that low, that you would probably get liquidated. It also costs, someone has to like physically come liquidate you. in a transaction cost. So if you have a very small account like that, it might even be lower. There might not be people who are willing to spend the gas money that it takes to then do the transaction to liquidate you. So hopefully some of this made sense. If not, I get it. But again, I just think that the Ethereum chart, and I think another thing I want to say is I think that the MATIC chart is tipping its hand, okay, to the market, because MATIC is sort of it's almost a leverage long on Ethereum, because people are now just understanding after Sandeep went on Bankless with his co-founder and did a podcast about Ethereum and not abandoning Ethereum. They are a very Ethereum centric bet. So they're basically, I think that the market is telling us we want to see more projects be Ethereum centric and use Ethereum's roll up solutions and use Ethereum as a settlement layer and use Ethereum as a security layer for your protocol, and to kind of bend the knee to Ethereum. And I think that that's what we're seeing with Polygon. And so the market is showing us that even though ETH is not at an all-time high, MATIC is getting very, very close to an all-time high. And on the weekly, it's way past an all-time high. So it's showing us that we like Ethereum, that we're betting on things that have to do with Ethereum, like MATIC. So I think that that is a key thing to look for in terms of like, did we bottom out in Ethereum? I personally think that we did. You see, we're up like 8%. We're up 1% on the daily candle. And we've had these run-ups and rejections, and it's been crazy. I mean, I do think that we could see, like, my prediction would be that it goes up and then it goes back down and we get even one more shakeout, maybe to like here 4,200, and then we break the wedge, we retest the wedge, and then we go. But it depends. We could go straight up. And like I said, if we go straight up within the next couple of weeks, I'm going to sell at 8,000. But again, if we kind of go sideways, we kind of go just steady up and then we break. I mean, I could honestly think like we might look back at this and be like, wow, this was all just accumulation. Because if you look at it on a log scale, it's not that crazy. And you look on the weekly on a log scale, as you can see, like, we're sort of just going sideways. Like, look how parabolic this got, right? This has just kind of been an accumulation. There hasn't really been a blow off. We'd like to see something like up in these ranges here. So again, these are just some of my thoughts that I've been having, and hopefully you guys got something out of the video. Please like, subscribe, and share it, let people know. Hopefully we've helped you guys, and hopefully you follow the Twitter too, because I try to get those thoughts out there every day. So have a great day.